Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien. Tommy's in Las Vegas at the Money Show, and let's go through the numbers because we've got a Friday close after a really strong week last week. What happened this week? Well, it's a very interesting thing. If you're looking at my charts, and if you're used to my Tiger Technicians Hour, you know that on the left side here is always the daily chart, in the middle is the weekly, and on the right is the monthly. I like to get this perspective. In fact, I also like to throw in the 120-minute chart when it's needed, right there in the corner. But let's do one thing at a time. The Dow closed down 35 at 18,867. Now, this is really interesting. We've had 5 sessions. The session on Monday popped a little higher than the close on last Friday. And what we're looking at is 18,934 was the high. And look at this. I wonder if I can, I'm going to do this. Watch these charts on the left here. This chart on the left, you see these bars, like inside candles, smaller and smaller, making what we call a little flag pattern, like you get in golf, that little triangle. So for me, there are 2 things that I look at that are absolutely imperative. One is within the price movement to the upside from the low of the 4th of November at 17,883. What has happened? Well, we've gone to 2 legs higher. I'm just going to do this real quickly. I'm going to show you. This is the pattern we look for in the Chapman wave. We look for the most identifiable low bar and then merely count each successively higher peak, expecting uppercase A, B, C, and then D, the 4th highest peak. Other things can happen at that point. On the downside, we look at lower, we call them troughs and the lower alphabet, and the highest we can go to is a G. Let me get that out the way, and I'll show you something very interesting. Within the context of the daily chart, the 9-period moving average, this black line here, this moving average that's at 18,739, which is key support on the shorter term, it wasn't even approached so far. And I'm anticipating that somehow or other we make slightly higher highs next week, 2 higher peaks, not 2 higher bars, but you have to make a peak above 18,934. That'll be C, pull back, and then go to D. At that point, I think we might be ready for a deeper consolidation, a breather. But look at the MACD, the moving average convergence divergence. This is tremendous. This is huge power. And the stochastic gives the torque. It gives that upper thrust. And then the MACD gives you that momentum, like an overdrive, and that has to keep the price going. So the stochastic's at 94%. Above 80% is really good. In the 90% area is really, really good. So that's the daily. The weekly had the single leg spiral to the upside. And look at this little candle this time. The whole week, all we did is that little tiny candle, little plus sign. So that says to me 2 things. One is, if there is a move above 18,934 this week and a close above 18,934 going into the Thanksgiving weekend, then very quiet day, Friday, the market is open. We will be looking at something that's very positive. In fact, if we close below the low of this week, which was 18,000, let's call it 18,800. A close below says that we could have a timeout starting this coming week. I like what I see in my monthly chart. It is really exciting. So now let me go on with these other charts. The S&P closed down 5 at 2181, having this leg B. That's very positive. The weekly chart needs to get above 2193.81. Why? Because all of a sudden I'll have a different wave count, and most importantly, I will have started in the S&P to get a count in my Chapman wave methodology of leg C. I'm looking for at least a D, and we are one behind the Dow at this particular point. So this is very important to me. And it says that going into 2017, even if we have a sharper pullback at some point going into the end of the year, we should still go to higher highs. That's very important. Now let's run the others. You got the QQQ, which is the NDX 100, really struggling here, and it has to do with Amazon. Let me just real quickly to show you. Amazon is way off its high, all-time high of 8,047. Let me squeeze this a little closed here that I can see all the prices. 8,047.21. Peak F in the Chapman wave. Peak D. There you get that D again. Second D, there was one there, and there's one right here with the doji close. So it says that Amazon, for my subscribers to my opening call, I'm going to spend a bit of time this weekend discussing what's happening between some of the brick and mortar retail stores and Amazon. This is the first time Amazon might have a little bit of a problem. It's what happened last December. That was not November. It was December. Amazon made a high and then plunged down in January and February. All right, so let's go on. I want to look at gold. GC, gold was down 8 at 1208. One of the reasons why gold is down and it's closed underneath the very important low of the 3rd of June of 1209, this is the middle chart, the weekly chart, is it's got that H pattern or the very large arch formation. And that arch formation says a close below a very important left side low, in this case 1209, has only one more bar to close above it, because if it stays below it, it says it's going to make lower highs and lower lows and keep doing that for a little while. And one of the reasons is because the dollar, I've been talking about this for a while. The dollar's action has been stupendous, just really fantastic. It's gone to that D. Remember, we were talking about Ds in the Chapman wave methodology. It doesn't matter whether it's a 1 minute chart or a monthly chart. This is a monthly chart, and we've finally gotten that leg D with a really strong close in the weekly and a very strong close in the daily. And I think that's putting pressure on areas that before were looking very good. So before we go to our first break, let me just quickly go through crude oil. Crude oil right now is stuck between a range of about, I would say, 47.80, maybe 80, 48.20, that area, with a support in the 44s. Just kind of stuck there for a little while. If I'm looking at bonds, the TLT, not a good close today. Underneath that left side low of 120.73 today, closed at 120.82. Oh, it closed above it. Well, that's a good sign. What we're looking at here is that the bonds have broken down. Look at this. The TLT, this is the Lehman 20-year T-bond fund, went from a high of 143.62 back in July. And just in a few months, we've gone down to 120. That is a 20-point decline. That is really big. I mean, now you're talking double-digit declines in the interest rate. The TYX, look what it did. This is the X is the 30-year T-bond interest rate, and it made a slightly new high. I'm going to call that new leg C. I think this is very positive in the short term for yields going higher. It's not positive if you're getting a loan. Okay. Now, one of the things we've got to be looking at as we're about to go to the break is the VIX index, and the VIX index closed under 13. It closed at 12.85, down 50 cents, testing a very important trend line. I'll talk more about this when we get back. Basil Chapman sitting in for Tom O'Brien. My service is the opening call, and I'm here at TFNN to sit in for Tom O'Brien.